Hello, everyone. Thanks so much for joining today. I'm going to speak about whiskey barrels and whiskey barrels as an alternative asset. So, the economics behind it, and how I got involved in the space, and what my businesses do in the space as well. So, thanks for joining, and we can go ahead and get into it. Give me 1 second while I figure out how to. Oh, there we go. All right. So, a little bit about me. I grew up in Bardstown, Kentucky, bourbon capital of the world. So, I've been around bourbon and whiskey my entire life, which is how I got plugged in here when I was in college. I actually got the opportunity to start investing in whiskey barrels through a group with my family and friends. That's what our share is for me. It's a play off of Angel's share, but our share. And that's where I really got my experience in the whiskey space. We started buying barrels back in 2019, and we had a couple brands that needed barrels aged, and so we'll talk a little bit about what that process is like later. Then in 2022, I actually went out and started my own company called LQD Assets, and we started an investment fund in whiskey barrels where we, gathered a bunch of people and basically use these barrels or use this money to buy barrels on behalf of brands. And while they appreciate in value over time, we hold those barrels. Then we sell them back to a brand after a few years, when the barrels are old enough for them to be put into a bottle by the brand. That also has since expanded into a storage facility where I co founded that with my father and another partner, Doug Hunley, which is in Springfield, Kentucky. We've got about 70,000 barrels aging in our warehouse today. It's about 110,000 square feet. We can hold up to about 100,000 barrels right now, and we actually have the capacity to expand that as well. So those two businesses work hand in hand. I also have a little bit of a consulting arm as well, with my company, LQD Assets, where we actually build, curate, and develop brands outside of helping them with financial aid for their barrel purchases and sourcing and so on. So it's a photo of my partners down there in the corner, and me as well. My professional experience. So my background's actually in civil engineering, and so a little bit different than the whiskey space, but you can apply, I believe, engineering to pretty much any career. It teaches you a lot of problem solving skills, and it's been super valuable for me. I've been an entrepreneur since I can remember. I had a lot of little side gigs and things when I was younger, and really led me to, become an entrepreneur in the bourbon industry, connecting my heritage and my hometown with, the entrepreneurship opportunities. Really allowed me to grow my business and my brand. And, you know, it's something I've been passionate about for many years. And I always knew I would be an entrepreneur in some facet. And so, since we're sitting here talking about barrels as an asset, I thought it was valuable to share kind of my experience in the investment space as well. So, I started working in the stock market when I was quite young in my early teens, and I had a tenants in common trading account with some family and friends. So I really did start to understand supply and demand and the economics of investing when I was pretty young. And like I mentioned earlier, in college, I started with the barrel investing. Post college, started with some rental properties, and then now we have our warehouses, which I would consider commercial or industrial real estate. So I do have quite a bit of experience in the investment space. And barrels, I would consider them an alternative asset. So as we talk about those today, we'll kind of dig into the details of what that looks like. So why whiskey barrels? Why are they valuable? Why are they, something that we would want in our investment portfolio? So barrels do appreciate in value over time. As they age, the supply of inventory decreases. On top of that, the actual amount of liquid in the barrel decreases. So that's what we call angel share. You lose about 10% in year one of the liquid, and then another 4% every year after that is generally the rule of thumb. So your supply of liquid inside of the barrel decreases, making the supply in general decrease, which, inherently makes it a little bit more rare. And so that's why barrels continue to appreciate in value. Now, as soon as you take those barrels and dump them and put them into a bottle, that appreciation stops. Then you have, inventory sitting there, and the time starts ticking to see a return on that investment to get that product out into the market. So, I would say barrel inventory acts similar to a commodity in the fact that it's very constrained by supply and demand. And so when demand is up and supply is tight, prices are high. When it's the reverse, prices tend to decrease. However, barrels have been a pretty steady investment over time for the majority of existence. If you're familiar with the industry right now, we're seeing some changes with that. But even with that, there's opportunity in this space to take advantage of it. When you look at a capital market, you tend to buy low and sell high. So it's a great time to enter the market right now, and take advantage of some of these opportunities that are out there. So we also talked a little bit about the time frame. That's another reason that barrels continue to appreciate in value, because there's a lot of time that goes into this inventory. You're really not supposed to put a barrel into the bottle before it turns 2 years old. You can't technically classify it as a straight bourbon until it's at least 2 years old. Typically, people want to put it in the bottle after it turns 4 years old. That's when you can stop putting an age statement on it. And so that's when, it becomes a little bit more appealing and enticing to the general public. The flavor profiles mature. You start to see a little bit more of a blended profile in the whiskey. When it's a little bit younger, in my opinion, I've always used the term zippy. Your grain elements are more separated in the flavor profile. And I think as it gets older, it becomes a much more cohesive flavor profile. So, the next slide, we'll talk a little bit about the life cycle of a barrel, new fill into the aging process. Those barrels will appreciate in value, and eventually they'll get put into a bottle and put onto the shelf. So distillation is the beginning phase of a barrel. You'll get the inventory produced as liquid, and then you'll put it into a brand new charred oak barrel. Then those barrels will get moved to a warehouse where they'll age for, anywhere from 3 to 20 years. Typically in our inventory, we have anything from 3 to 8 years old. So when we start to see inventory move out of our warehouse, but everyone loves those super age stated products. You can get some amazing proof points on inventory as it ages. But like I said earlier, as it ages, it loses volume as well. So that continues to allow appreciation to happen, because scarcity begins to occur. So after the warehouse, it'll go into the secondary market. If you're not working, in terms of a heritage distillery, they handle most of their process from beginning to end in-house, whereas somebody like a non-distilling producer will source their barrels from the secondary market. They actually will typically not even hold the inventory until they're pretty close to ready to put it into the bottle. The value of holding it earlier is really to get that appreciation. So, your cost of goods decreases. However, when you're a young brand, it's much more valuable to have that operational capital over time to go out there, market your brand, spend it on inventory, and start to see that return on your investment. So, a lot of brands, particularly NDPs, will buy off of the secondary market from somebody like us that holds these barrels over time. Once they're aged to a certain age, then it'll get blended, put into a bottle, and then you go through the 3-tier system, which you may be familiar with. You'll go from producer to wholesaler into the retail space, and that's when it gets into the hands of the consumer. So we've talked about this a little bit already, but what actually creates value in a barrel? Time and maturity really are a big piece of that. You can't create something great without having a little bit of time invested. So we do really believe that as the barrels age, they do continue to become a better product. Distillery reputation definitely plays a role in the value of a barrel as well. Distilleries with a big name and reputation are easier to sell when you get onto the secondary market. A lot of brands really like the consistency of putting the same product into the bottle. And so a distillery with a good, consistent reputation adds to that, along with the mash bill. So, your mash bill is your grain recipe, corn, rye, wheat, and barley, some combination of that goes into your barrel. That's what really creates the flavor profile of your inventory. And so most brands prefer to put the same mash bill into the bottle from the same distillery over time. Now there is also an amazing strategy of putting one-off unique products into the bottle. Obviously, that creates scarcity as well, and that's a very exciting strategy we're seeing a lot of brands take in today's environment as well. So, warehousing environment is a huge piece as well. You really get to experience the elements. Barrels need that in order to age. So, having the temperature swings from a really cold night into a 95-degree day, that is what allows those barrels to expand and contract, and the liquid seeps in and out of the barrel, which contributes to the aging. So it starts to get some of that oak flavor. The barrels come from trees from all over the world. And so I like to say barrels are like snowflakes, no two are alike. And your warehouse environment, as much as your barrel, really do contribute to that uniqueness. Now, there's enough similarity among barrels that are aged in the same environment, produced with the same mash bill at the same time. They'll experience similar temperature fluctuations. And so there is some cohesivity that allows you to create a consistent blended product. But the technicality of it is there really are no two barrels that are exactly alike. And we talked a little bit about yield earlier. So as your barrels age, they continue to lose volume. And so, you can get to a point where a barrel has no liquid left in it. Of course, it loses value at that point. But there's ways to manage that and track that over time to ensure that you still have inventory or liquid to put into the bottle when you're ready to dump those. You can do a gauging process. You can do a weighing process. Those are the two most common ways to ensure that, your barrels still are valuable. Every now and then you get an empty one. We have those in our warehouse. Honestly, more frequently than not, it comes from a leak in the barrel, or sometimes we've even had an empty barrel make it into the warehouse from day one, but that's pretty rare. So most of the time, you can get a good idea of what's going on in the barrel. And then consumer demand is a great element of what creates value in a barrel. What are consumers buying off the shelf? I think a lot of consumer demand is based on scarcity. I was talking a little bit earlier about the strategy that brands are taking on now with releasing these one-off products that are never going to be produced again. And I really do think that adds a lot of value. It becomes a collectible item for many in that situation, along with, you cherish it. You cherish that product a little bit. And so consumer demand plays a huge role in, what brands want to continue to put on the shelf. If you get good consumer sentiment, you're going to want to repeat that product. Supply, on the other hand, really does have an effect on the pricing of the inventory of the barrels. And so if you have a very traditional mash bill from a reputable distillery, the value of that is probably going to be a little bit lower than something unique and one-off because of that scarcity that we just talked about. So supply and demand play a huge role in all aspects of this industry, from barrel supply all the way through to the consumer when you're, on the retail shelf. When you think about allocation, huge benefit for somebody like Blanton's, that, they're very unique in the way that they distribute their product, or even Buffalo Trace. A lot of states have that on allocation. So really creating that supply and demand push and pull is valuable for these brands to continue to grow over time. And storage and carrying costs, they're a part of the aging process. So you really do have to consider those in terms of pricing when you're, buying and selling inventory as well. And market timing, that's always helpful, plays a lot into the supply and demand, just like we spoke about earlier. So barrels are an alternative asset. What does that really mean? Alternative assets are ways to diversify your investments into assets that are going to continue to appreciate in value, but they have different underlying metrics that they work off of. So, the stock market is very much so economy based, consumer demand based, and, really plays a role, ties very tightly to what's going on in the overall economy, the business world, things like that. Real estate is very much so tied to interest rates. Whiskey barrels, is very much so tied to consumer interest and consumer spending. And so this allows you to have an asset that's going to continue to appreciate in value, but may have some different underlying elements that contribute to the value of it and the fluctuations within the industry. And I always like to mention, the good thing about an alternative asset or even just a tangible asset is that even if the value of the product goes to $0, you still have a physical tangible asset. So there is value in that regardless of the volatility. Whereas when you have a stock and the value of that goes to zero, you truly have nothing when you're working in the stock market. So that tangible asset really is something that's appealing to a lot of investors. And so typically when you're looking at alternative assets, it's a little bit more risk with a little higher reward. And so that's a big reason that investors are interested in participating in this. Although you do sacrifice liquidity, stocks you can really come in and out of on a daily basis. This kind of inventory you're sitting in for 3 to 8 years, maybe even 20. Like I said, you can get up to barrels that are aged that long, but typically you start to see barrels moving in that age range. It's a hedge against inflation by having a physical, tangible asset, like we talked about earlier, that's going to continue to appreciate in value. And there is a little bit of exclusivity in participating in opportunities like this as well. Typically, they are private invitation only for a version of accredited investors or similar investment groups where you have a underlying asset value for your net worth as a minimum to participate, and that is truly because of the risk associated with it. Institutions have shifted heavily into alternatives, which is really making something like this become more standardized, which I appreciate. I think it's great to diversify yourself. I personally have quite a diversified investment portfolio, and I do think it gives you a lot more stability in the growth of your own personal investment portfolio. So we talked a little bit about this with the last slide, but how do whiskey barrels specifically fall into this? They do operate on uncorrelated market indicators, which adds stability to it. Typically, they appreciate in value at a higher return. Each barrel is a tangible asset that appreciates. It's a hedge against inflation. So as production costs and replacement values rise, so does the market price. That also plays into the storage costs, all of those kind of things, and also supply and demand scarcity. Exclusivity, private market growth. We talked a little bit about that already. Bonus that my family always likes to say, it's a little bit of a romantic investment. It's pretty cool to tell your family and friends that you're investing in some whiskey barrels that are aging in the state of Kentucky. They smell good, they look beautiful, and make you money while you sleep. So that's the dream, in my opinion. So to compare to some other asset classes, we've got whiskey barrels that are, Scotch, Irish, Japanese. Bourbon barrels are obviously uniquely American. Tequila, wine, and then you can also get into bottles versus barrels. And so we can kind of talk about the differentiation between barrel appreciation and bottle appreciation. With barrels, the underlying asset will continue to appreciate as it ages. It'll start appreciating from day one until basically it's dumped into the bottle and put onto the shelf. Wine bottles and whiskey bottles, when you get into that collectible space, typically it takes there's a window between when those bottles start appreciating because it's a supply and demand thing. So typically when there's a lower supply of a specific vintage of a wine bottle or a specific collection of whiskey bottles, that's really what creates that value. So an amazing product gets put out. There's only so many. And so after a few years, they will start to, have value, and you can start trading those on the secondary market as well. I'm much less involved in that side than I am in the whiskey barrel side of things, but you can kind of look at this chart to see the comparison between wine, tequila, whiskey, bourbon. They're all very similar. The biggest difference is the age timing. And so when you go over to Scotch Irish whiskeys, their climate's quite different. And so, in my opinion, it takes a little more time to get that flavor profile developed. And so we have some extreme temperature swings here in the US, going from those cold nights into those really hot days. And so that lets that expansion and contraction happen a little bit quicker. And so the barrels mature a little faster. And so you can even find different pockets within the US that have stronger environments for that as well. I like to say Kentucky's the best. I'm a little bit biased, so take that one with a grain of salt. So how does this benefit our brand partners? So I'll talk a little bit about our investment program and how that works. I've got another slide on it, but we're going to go a little out of order here. So our investors basically buy these barrels at new fill. They take ownership. They have the financial responsibility to these barrels while they age. And so our brand partners will come to us and they'll say one of two things. They'll say, hey, I need a barrel right now, and it needs to be 4 or 5 years old, and we want this mash bill, and we're going to put it in the bottle in, a couple weeks, 6 months, something like that. So that's what's considered a spot buy. So we as investors are predicting what is going to be needed in the future, what kind of inventory will be needed in the future for our clients and the general market. And so from that, we will take the inventory and fill the supply gaps for brands that need inventory at the last minute, or maybe don't have the money to invest in it to participate in that appreciation. And then we have futures contracts. So that would be a situation where a brand will come to us and they'll say, hey, we've got a very consistent business model. We know here's what our demand is, and here's what we predict is going to grow to over the next X amount of years. We'd like to lock in some inventory now. So we know where our inventory is coming from. They may have a unique mash bill, so it may have to be produced uniquely. And so basically we'll have an arrangement there where we buy the barrels, they pay a yield into the fund every year to get a vested interest, and then in the future they'll buy those back. So typically that's on a new fill arrangement. And then the buyback program that we do is a brand has 2-year-old barrels and they know they're not going to put it in the bottle until they're 4. So we'll buy that inventory off of them at an agreed upon price, age it for 2 more years. We have a yield arrangement as well there. And then the brand will buy it back from us at 4 years old when they're ready to put it in the bottle. So it's pretty similar to the futures contract, but typically that's on already aged or existing inventory. And so we just have to go through the numbers to make sure that works for both parties. And the value of that really for a brand is they get operational capital back to grow their business while these barrels are appreciating. It's a lot harder for a brand to grow when their money's tied up in the asset of a barrel. It's harder for them to, spend that money on anything else when you don't have a lot of cash flow. It's a very capital intensive industry and business. And so having that cash in their hands does allow them to operate much more smoothly, and it does allow for the growth cycle to continue. And it decreases their time frame from investment into the barrel to their ROI as well, which is always valuable when you're operating on slim margins or delayed payment timelines, which you can get into with your wholesaler, and that's a whole nother conversation. So we've talked a little bit about it, but we've got our investment program. That's kind of what we just went through a little bit. And so we also offer barrel storage and brand consulting. We've got about 110,000 square feet worth of warehousing space where we store our barrels today. And we can go through to the next slide and it'll walk us through each of them. So we help brands with sourcing, anything new fill aged, super aged, barrel buyback and exchange. We talked through a lot of that already. Branding and marketing, helping you get your dry goods curated, labels, bottles, product development, anything from idea to finished product, really. And then we have some great partners that we work with on the distribution side of things. They can help you get plugged in with a new distributor, fractional sales reps, all the things of that nature, along with direct consumer outlets and other strategies, digital advertising, marketing, to help get your brand out there and grow over time. We can offer services to help grow any brand at any stage as well. We've talked a little bit about our storage facilities so far. There's a photo. It's over in Springfield, Kentucky, which is about 30 minutes away from my hometown, Bardstown. So right smack dab in the center of Kentucky. It's great access to the Bluegrass Parkway as well. So very convenient location. Right now we have 3 warehouses. We have the capacity to build 2 more, and we'd love to fill up our warehouses and continue to grow over time. Right now there's a need for it. Barrels are sitting a little bit longer than we expected originally. And so people are seeing, escalators and things like that come along. And so we're proud to say we've got great rates. We'd love to help you move your barrels. And we've got a great place for them to sit if you need them. We do have palletized facilities as well. There's 2 ways that you can really age inventory. Ours are palletized, so you've got your pallet. We can stack them up to 7 stories high or 7 pallets high in the peak of our warehouses. The difference between that and ricked storage is there's a lot more consistency in the temperature swings. So the consistency of the temperature from the bottom stack versus the top of the stack is a little bit more consistent because the height is a little bit shorter. Where you're in a ricked facility, there's a lot more separation between levels. And so with that, you get a lot more temperature swing. So the bottom floor is a little cooler, top floor is significantly hotter. So that differentiation and that delta really does change in a rick house. Whereas you can kind of see these little white windows here. They're not really windows, they're fans. So they open, and it helps us treat the warehouse almost as a convection oven. So during the day, they're shut, the warehouse heats up, and at night we open those and run the fans, and the fans bring in that cool nighttime air to help with that expansion and contraction. And so because our barrels, from the top of them to the bottom of the stack, that's a little bit of a shorter height than it is in a rick house, you get a lot more consistent airflow and consistency in the proof point and the differentiation of barrels in a palletized than you do a ricked. One's not better than the other. A lot of romance with the ricked side. We chose palletized for efficiency, and there's a million reasons you can do either one. And we've already kind of talked about our investment program, but I can dig into it a little bit. We do have the opportunity to invest through IRAs. We've got a couple different IRA partners that we work with, which is unique. So, that's money you're already not touching for an extended period of time. So having that tied up for 3 to 8, 10 years is not the end of the world when you already have that money that you can't touch. So that's a really big value add for us. And a great thing about this, the way we have our program set up, you do get to claim capital gains rather than ordinary income. That was one of the big changes that we made when I was working with that original group as a member and went and founded my own company doing this, was creating that degree of separation between the investor and the decision-making and the asset really allowed us to be confident in that transition from claiming ordinary income versus claiming capital gains. And so if you'd ever like to talk about that a little bit further, we can always dig into the investment program on a separate personal call. So right now we've got about 100 entities that invest with us. It's all private investors. We have no institutional capital yet. That 21 million is actually 22 million now raised for barrel purchases from inception to now. 14,000 barrels. We're about to be at 15,000 that we own within our inventory. We can utilize those for our brand partnerships. Investors own all of those barrels, and they're all aging at our warehouse over in Springfield, Kentucky. We've got a couple thousand more under contract over the next few years, and we've purchased barrels from 5 different distilleries with an average annualized return of 34% since inception. Now, if you know the current state of the market, it's pretty hard to hit those numbers right now, but we do still see upwards of 10% annualized return. And in a low market, I have a lot of confidence that that's pretty good in comparison to what you're getting in other markets, or at least in this industry right now. And so, we want to be honest about everything we're doing here, and would love to run through the numbers with you of what's going on currently. And we do still see this as a very strong market. I frame it as now is a great time to buy when we're at the low point of the market, and hold our inventory until the market recovers a bit. And so there is strategy associated with timing of the market and what's going on in the industry to be able to make smart decisions on behalf of our entire investment program, to make sure that we're all happy and moving forward, and confident in the decisions that we're making. And so with that, I think there might be a few questions in the chat that I'll read. I'll leave this contact screen up right now for you to jot down my information in case you're interested in chatting. I'd love to talk to you about building a brand, storing your barrels, anything on the investment side as well. We'd love to have you. I love having these conversations. So anytime we get the chance to discuss, I'd love to do it. So what QC work, if any, do you do on the fresh distillate before it goes into the barrel? So all of our distilling partners do QC before we even get the inventory to us. We'll have a conversation about it. They also do hold and send to us samples of all the fresh distillate. So you can even compare our fresh distillate from the aged distillate as well. So that we rely on our distilling partners for that, and they've done a great job of that over the last 7 or 8 years that we've been working in this industry. Looks like that's the only question that we have. If there's any more, please throw it in the chat. Otherwise, I think that's all I've got for you guys today.